Hi, I'm Michael Scott. Welcome to the Video CPA. It's good to have you here again. I am the Video CPA. I'm a CPA with 45 years of experience. I'm also a certified management accountant, and I've got a master's degree in accounting. And so it's good to be with you today. I'm glad you're here. Today we're talking about our third installment on 2020 tax law changes. These are changes that have been made so far and will affect your tax return in 2020. The good thing is that there's not a lot of them, and they won't impact a great deal of people anyway, but may well impact some of you. So let's get to it. First slide is our affiliate action disclosure. When I say affiliate action, that almost sounds like affirmative action. Excuse me. It's my affiliate disclosure that says if you click on some link in our description of this video, it'll take you to Amazon or somewhere, and if you buy something, we get a commission. Also, we've got the educational disclaimer in here that says, hey, we do our best, but you need to make sure you do your own research as well. So, 2020 mileage rates. These things have changed. They change every year. So you'll notice then that they've gone down this year because gas prices have gone down. I mean, there hasn't been as many people traveling with the COVID-19 being around. So 57.5 cents per mile for business and 17 cents per mile for medical. Now, there's also a charitable mileage rate, and that's 14 cents a mile. That hasn't changed, so that's stayed constant pretty much. So if you're doing charitable work and driving your car for charitable work, it's 14 cents a mile. Now, I don't have it on this slide, but that's because it hasn't changed. Still 14 cents a mile. So those are your mileage rates for 2020 that you'll be using on your tax return. The next one is for retired folks, and that it used to be that you couldn't contribute to a traditional IRA if you're over 70 and a half, and now they kind of repealed that, so you can contribute anytime you want. But so that's gone away. And the next one is similar. This is when you start your required minimum distributions. And if you're in a retirement plan, IRA, whatever, the government forces you to start withdrawing from that retirement plan at a certain age. And it has been 70 and a half. It's been changed this year to 72. And if you look at a lot of the literature around, they still say 70 and a half. It hasn't been changed. This change just took place a couple of months ago, but even the IRS documentation has not been changed in some cases. And I know I was looking at a retirement form the other day for a gentleman that was retiring, and it still says 70 and a half. So these things haven't been updated. So if you see 70 and a half instead of 72, don't be alarmed. I am right on this, and so just know that it's 72 now. All right, the 10% early withdrawal penalty for IRAs and retirement plans. You can now withdraw $5,000 out of an IRA or retirement plan without penalty if it's for births or adoptions. So if you have to pay for a child to be born, if you're using that money, if you take it out though, you better use it for what it is intended, or the IRS will come back and make you pay tax on it. So it's got to be for a birth or an adoption, but it can be up to $5,000 now to pay for those things. So that is something that you could not do before, and so there's no penalty on this. There, of course, is tax on the $5,000 if you take it out, if it hasn't been taxed before. So keep that in mind. Beneficiaries of inherited IRAs that are non-spouses. Used to be they had several alternatives for how they took the money out and when they took the money out, and now they're being forced to take the money out over a 10-year period. So the government, if you receive money like this and it's in a tax-deferred account, the government really doesn't want you holding that money for very long. They want you to start withdrawing it and paying tax on it. So that law has been changed for non-spousal IRAs, or non-spousal beneficiaries, I should say. All right, that's it. Those are the tax law changes in 2020. So over the last 3 videos, we've talked about these tax law changes. And like I say, it hasn't been a real busy year for tax law changes. And I don't think we're going to see any more for 2020 unless they do it retroactively. It just depends on who's elected in November. But I would doubt that we see too many more tax changes for the year 2020. Nice having you with us. If you haven't subscribed yet, hit that subscribe button and subscribe so you get updates on all these videos that we're producing. If you need more information on tax subjects, go out to our Targeted Tax Training School, online school, www.thevideocpa.com, and take a free class out there. Right now they're free. They're not going to be free forever. They have been submitted for continuing education review. As soon as they're approved, the majority of them will not be free anymore. So take the opportunity when you can, if you're interested in tax matters. If not, hey, have a good day, stay COVID free, and again, thanks for joining.